Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Monday the 22nd of the 11th, 2021. The time is just gone 10 past 4, 0400 in the morning GMT. Asian session coming to close, European session firing up, our lunchtime North American session. Right, Friday the 19th and the last full trading day last week, we had a negative opposed driver in the euro at minus 240. Front and back door flows mainly going into the yen at plus 238, into the dollar at plus 114, and the pound was a negative rocket minus 112. Activity plus or minus 352. Last week then, just for context, Monday the 15th to Friday the 19th, we had a negative unopposed driver in the euro at minus 468. No backdoor flows. The opposing positive flows mainly going into the pound at plus 213, into the dollar at plus 135, and the yen was the positive rocket plus 120. Activity plus or minus 468. Right. So Friday we had a weak euro, and over the week we had a weak euro driving to the exclusion of all else in the majors. And if you look at the intraday then, so this is Monday the 22nd, today open to about 15 minutes ago. We've got a positive unopposed driver in the dollar plus 76, no backdoor flows. The opposing negative flows mainly coming out the euro at minus 46, out the pound at minus 26, and the yen is the negative rocket minus 4, activity plus or minus 76. So the big takeaway of this is you can see that it's not obvious, but if you know what you're looking for, you can see that the euro is starting to strengthen up. So Friday the euro was the opposed negative driver. Over the week it's the unopposed negative driver, and intraday then today it's the negative secondary driver. So in terms of FX gears, it's over the last week it's in minus 5. Friday it's in minus 4, and today it's in minus 3. So you can see that it's coming up the negative gearbox on the way to positive. So anyway, I'll stop it there and write up the flows. Right, I've written up the flows then. So the euro is weak except against the yen and the NZD. The yen is weak except against the NZD. The pound is strong except against the dollar, the CAD, the AUD. The Swiss is weak except against the yen, the dollar and the euro. The CAD is strong except against the AUD. The AUD is strong across the board. The NZD is weak except against the Swiss, and the dollar is strong except against the AUD. So what have we got? We've got AUD strength across the board, and we've got a mix on the weakness. We've got NZD weakness, and we've got yen weakness here, and take your pick in the middle. So what's going to knock it about, or has knocked it about? We've had the China rates decision, which was pretty neutral overall, and it's thin data today, apart from at the end of the, which is basically near overnight for us, the NZD retail sales, and tomorrow, Tuesday the 23rd, we've got German manufacturing service PMI, Europe's PMIs, and GBP PMIs. So tomorrow it's inflation data really for GBP and Euro and Germany. On Wednesday we've got New Zealand dollar rates decision and US durable goods and the FOMC minutes, just to polish it off, which will be our evening time on Wednesday. So the key thing is then we've got this NZD in play later on with retail sales, and some Wednesday early morning with the rates decision. So that's where we are there. So we'll stop it there and write up the asset classes. Right, we've written up the asset classes then. So US dollar index, basically it's at a double top. It's pretty high. It's broken significant resistance before, and it's now holding the highs. Gold in theory won't like a strong dollar, and is at 0.25 from the high. It's come off 25%, but it's still relatively higher given the inflation trade that they're involved and the physical buying likely later in the year. Oil did this break. It's now nearly come back to the resistance point. It's 0.4. It's come off 0.4, 40% off the high. Wall Street, S&P Tech, they've all done this big break. Wall Street's come back 0.17 from the high, so it's nearly back at its resistance break. The S&P on the other hand is at a double top, so it's holding its position, and the tech has broken twice, so it's 0.05, so it's 5% above the second resistance break. So in terms of strength, you're looking at tech, S&P, Wall Street. US 10-year in the bund, this is the price, remember. The US 10-year is 0.20 from the floor, so the price is below half marks, yields relatively strong, whereas the bund's the opposite. It's 0.14 from the high. Price is high near the top, so yields are relatively soft. So we've got this divergence in US 10-year and EUR bund. Right, copper chopping about, but it's just below half marks, 0.45 from the floor, and steel's at half marks, 0.50. So that's where we are there. So we'll just do the final analysis and get rid of this then. So basically the way the economic calendar is shaping up is we've got the New Zealand dollar in play, we've got inflation data coming out, PMIs, and we've got this Fed situation Wednesday. So yen, pound, CAD, AUD, NZD, Swiss. Right, so if we grab this, so the NZD, then we've got retail sales coming out later today, effectively tomorrow morning, and we've got the rates decision. So that's what's going on there. In the dollar, you've got really it's the FOMC on Wednesday, so we're sort of swinging into that, and we've got inflation data coming out for the Eurozone and the pound, and that's really, and we've got oil has come off in the CAD as well. So and if you look at the flows, the big takeaway, as we said, is this relative slowdown in euro weakness, and the market is positioned very short on the euro, and it's vulnerable to a shake-up. We've got the Fed, we've got Biden on Tuesday going to talk about inflation, apparently. So he'll be presumably trying to calm the markets down, and it's likely to take a bit of sting out of the dollar. In which case, the main beneficiary is going to be the euro. So and you're likely to get equities getting sort of a further boost, and the fact that the tech has done a second break suggests that they're in no mood to slow up really. So equities are likely to come up maybe a bit on Tuesday. The euro's likely to bounce, and the dollar's likely to come off. So what have we got in terms of? So this is the positive and this is the negative. So you're likely to have yen transmission weakness, dollar weakness, and if you get that scenario, that's basically risk on, and then you're left with pound and euro, and the euro's been thumped down. What you're likely to see then today is the final knockings of euro weakness and dollar strength. And then you're going to get this swing into euro weakness. So if you're positioning yourself today, you want to be careful about buying the euro, going long on the euro just yet, because you're going to get the final knockings of dollar strength. But nevertheless, excuse me, the whole key to it coming on will be this massive bounce in the euro, we think, at the expense of the dollar, and the yen will be neutral to negative off the equity transmission, and the pound will probably be neutral, maybe to negative as well. So that's a possibility. It'll be in this section here. So anyway, that's where we are. So take care in the markets, and we'll see how we go tomorrow with the Asian flows, and we'll see what the timing of this euro bounce is. So anyway, thanks for watching, and goodbye.